Welcome to the first morning exchange event here in London. First of many, we hope. Thanks so much for coming, braving the London weather, the bank station at 8 a.m. in the morning, and that fountain just outside, which is kind of scary. We'd like, obviously, to welcome you all. As you know, I'm Francesco Guerrera. I write the Morning Exchange, the Morning Exchange daily newsletter. Now you know. It's a daily newsletter that reaches about 18,000 people every day, and it's about financial services. Sets the agenda, tries to set the agenda. Also talks about little scoop tidbits, things that should be of interest to you all. We also have a pro version, which is a longer, more detailed version that gets into your inboxes at 6 a.m. London time. And I encourage you all to take a look at that. And if you need help with that, let me know. Today, we're very lucky to have Steven Maijoor, who is the chair of ESMA, to talk to us. And the timing couldn't be better for us. I don't know for Steven, but for us, it's one of the best timing we could have had. We have a lot to talk about, not just about what you think. There's other things to talk about in financial services regulation that Steven can help us with. A couple of housekeeping remarks, and then we would love you to ask questions. During the Q&A session, we also have roving mics. I might break during the session as well to ask directly if there's anybody who wants to ask a question. Please announce yourself, your name, your company affiliation, and the mic will come to you. I want to thank, of course, our partner in this event, our partner in many events, which is Nasdaq. In fact, Nasdaq is also offering us the Wi-Fi connection. Very important. The network is POLITICO, but the password is Nasdaq. That's the kind of partnership that we have. And no, it is. And then if you do use the Wi-Fi, don't use it to check your emails, but use it to tweet about this event. The hashtag is Morning Exchange, and we got this tweet walls, they're called, and you'll see your own tweets scrolling live, essentially. And please tweet judiciously but copiously. And at the end of it, very important, fill your evaluation forms. They're very important for us to kind of improve on our events and make sure that the next event is going to be even better. And last but not least, the event is live streamed on our website. So for all your colleagues who couldn't make it, please invite them to join. Without further ado, I'm just going to hand over to Hans-Ole Jokosman, who is the president of Nasdaq, who's going to make some introductory remarks. Thank you.
Thank you, Francesco. And good morning and welcome to everybody. Nasdaq is indeed delighted to presenting POLITICO's morning exchange here in London. I hope you all had time to enjoy a quick breakfast and a coffee in the reception. And I also want to extend a thank to University of Chicago Booth School for hosting us. This is really a fantastic space. I don't think it is an understatement to say that given the result of last week's referendum vote, we are on one of the biggest pursuits of change to Europe as the world's capital markets as we know it. Nasdaq, as I'm sure many of the companies represented in this room are, in rapidly taking in all the implications of the Brexit and how it will impact our world. Whatever the outcome, what we know for a fact is that we in Nasdaq will be very resolute in maintaining resiliency across our markets for all our clients, as well as for our trading and infrastructure partners. With all of that in mind, who is then better to hear from today than one of the most formidable key players in the global regulatory landscape, Steven Maijoor, who is the chair of the European Securities Markets Authority, or as many of us call it, ESMA, on a daily basis. Steven, who I believe I can call my friend, has been working in European finance world for several years and is one of the chief architects of many of the significant regulations in the region impacting the capital markets yesterday, today, and tomorrow, including the upcoming MiFID II and the Capital Market Union. For me, having Steven in the room somehow makes me feel a lot more safe. So to finish off and not spend too much of your time, I would like to thank you all again for coming this morning. And I hope that you will enjoy the conversation. And I really encourage you to come up with some questions for Steven. So without further ado, I'd like to give the floor back to Steven and Francesco. So let's get started.
Thanks so much, Hans Ole. Thanks, Steven, for being with us. I think we should start by kind of dealing with the mammoth in the room. It's bigger than an elephant, right? So Brexit, what did ESMA do on Friday as the market started to adjust to the surprise decision by Britain to leave the EU?
Okay. Well, let me first thank, of course, both you and Hans Ole for inviting me. I must say, we're both from the northern part of Europe, and we feel a bit uncomfortable when giving positive feedback to each other. So, but thank you very much, Hans Ole, for the kind words that you have given me. I think what we do for an event like Friday. And of course, in the past years, we had similar events where we expected that there would be a major impact on financial markets, is that we increase our monitoring in advance. It means that our economists start to increase their monitoring of financial markets, what is happening to currency markets, what is happening to bond markets. So that is one important part. The other important part is of course the coordination among the 28 national regulators. We have a number of tools in our toolkit to act when there are impactful events on financial markets. These vary from the stopping of trading in certain financial instruments, or in some cases there can be short selling measures. They are in the toolkit. We remind ourselves as regulators that they are available, and during the days in advance, and also at the day itself, there is coordination among the regulators involved. So that is a very important part of our work. Our assessment is that clearly the decision has had a major impact on valuations. It has increased risk perceptions, and that is what we have seen developing in the past days. At the same time, it is also the assessment is that the markets as such, as infrastructures, have coped well with the impact, and so that was also another reason to have any extraordinary measures. You called it the big elephant in the room. I'm sure that there will be all kinds of wishes about views from me on the future. I must say that that is now up to the politicians to decide. As you know, this has been a vote by the UK population. We have to respect that vote. And it's now in the hands of the EU institutions, Council, Parliament, Commission, and the UK government to agree on a way forward. So, it's not my role to further, reflect and speculate on possible implications for the financial markets. So I think it would be good to make that point in advance.
That's fair enough. Just to clarify one point, so you thought that the markets function as it should have, even under you would call stress circumstances, but you thought, from your assessment, that went quite well.
Well, I think, yes. So we know that a key function of markets is a place where people can, where parties can trade, and where they trade when they revise their assessments of values, when they revise their perceptions of risks. And in that sense, the market has performed well. It is important that people can continue to trade, and that has all been happening. So that was also the reason for not seeing any extraordinary measures. In the past there's been some cases where there were short selling restrictions were imposed. That was not considered necessary in this case.
Excellent. Now, moving on a little bit from Brexit, one other thing that's happened recently is the decision by the Commission to postpone the agreements on the execution of the agreements on bilateral clearing. That leaves the Europe in an isolated position compared to certainly Asia and the US. What's your assessment of that?
Well, I can say, Francesco, that I'm disappointed on the decision to postpone. I think it's important to realize that the date that was envisaged, and as you know, it's a kind of a staggered date depending on the characteristic of the financial counterparty, is on certain points in time the obligation starts to kick in. The staggering of these dates and the dates themselves were agreed among international regulators. They were, and also the Commission was involved in the setting of these dates. And we also set these dates. They were already delayed dates, so they were, these were dates going back to, let's say, the initial descriptions of EMIR. They were dates with the clear expectation of all involved that we would work on these dates. Also, because obviously this has international repercussions, or there are elements of EU counterparties doing bilateral transactions with the non-EU counterparties, and the question is then what are the relevant rules for those type of transactions. So we found it very important to adhere to these dates. We delivered, I should say, slightly later to the Commission the draft technical standards, but slightly, really slightly. It was, I think, a week. And you should also understand the complexities of getting these technical standards agreed, because these are technical standards that not only need the agreement of ESMA, they also need the agreement of EBA and IOPA. And so this is, a group of, close to 100 regulators being involved. And getting agreement in 3 boards separately is quite complicated, and this is also under qualified majority voting, so there's also the risk of blocking minorities. And so we were very happy that we agreed as all 3 regulators to these technical standards. And as I said, I'm disappointed that the timeline has been postponed. I think what is now important is to keep the delay as minimal as possible.
Mm. But in the meantime, though, what are your concerns about, especially when European counterparts are trading with non-European counterparts? How's that going to work?
Well, I think that is precisely the type of questions that will then also depend, of course, on the foreign, because in principle, the rules do not yet apply to European counterparties. The question is then, to what extent are these then caught by the rules of the third country? And so there's been a suggestion is that on the basis of extraterritoriality, some of them might still be caught. But I think, the proper the proper way forward should be here is to have an agreed regulatory requirements, in all major regions of the world. So again, I think it's very important to try to keep the delay as short as possible.
Mm. That's a good segue into the next question, which I think is about the overall relationship between ESMA and the Commission. You don't have to agree on everything, but there's been some, notable disagreements. This being one, MiFID, MAR. So, how would you describe the relationship between these 2 very important bodies?
Well, the relationship is very good.
Mm.
We cooperate very well together, and I think ESMA. Me personally, I'm very convinced we have an obligation to be as consistent as possible as public authorities. We have very important joint roles in many areas. We have to work together, and we are a very important part of the decisions, varying from technical standards to technical advice to equivalence decisions. We both play a very important role, and so it's important that we as public authorities, we work together very well. At the same time, we have different roles and different responsibilities. We are technicians. We are primarily looking at the issues from using our expertise and having the expert, the expert views on those issues is our prime driver. And I compare it very much to the relationship that also national regulators have with their ministries, where typically it is based on good cooperation, but there will be issues where there will be disagreement. But I think that is part of our different mandates and our different roles.
Mm-hmm. Do you think things will change with the resignation of Jonathan Hill?
No, these type of this type of relationships are based on what are institutional roles, what are we feel an obligation to work together. We need to work together. We need to cooperate, and as such, it is not determined by individuals. But just to say, Jonathan is a great person to work with. It was very good to progress with him on many dossiers. So, but again, these things are not determined by individual people. This is our institutional role that we have.
Mm. Do you have a good relation with Valdis Dombrovskis, or do you
well, we have had many. We didn't have many issues yet where we had to work together. But again, I would like to emphasize these things should not be determined by individuals. These things are determined by, on the one hand, I think we have an obligation as public authorities in this part of the same, to say it in that way, European bureaucracy is to work together. But there will be elements where, because of our different roles and our different mandates, we will disagree.
Mm. And since we're talking about these issues, one of the signature policies or plans of the Commission is this Capital Markets Union. How should we think about it after what happened on June 23rd? And how, from your perspective as a technician, how do you see a Capital Markets Union without the biggest capital market in Europe functioning? Thank you.
I suppose you want some water?
That buys you time.
I think this should normally your role, Francesco.
Yeah, that's true. This way you buys your time, right? So,
no, well, I think I made quite a clear, a point at the beginning. I shouldn't reflect on the implications of the decisions of last Friday. Just to emphasize one point again, and I think in the current situations, all EU law continues to apply. And also we need to continue to prepare for EU law that is in the pipeline. And that is not only me saying that. If you also go to the website of the FCA, they also made very clearly on their website, all EU law continues to apply. And also we need to continue to prepare for upcoming legislation. And of course, there is clarity on the agreement between the EU institutions and the UK government. I think on the Capital Markets Union, what is very important for us is to we are now moving from the single rulebook phase to implementation phase, and so consistent supervision is key, making sure that all regulators across the EU apply the rules as consistently as possible. And so that has also been the focus for this year and upcoming years, is really focus on supervisory convergence. And we have as priority areas in this year, we have MiFID, and I'm sure you will have some further questions on MiFID. We have CCPs as a priority area, because derivatives is one of those areas where there is it is extremely important to be consistent, because it's the most susceptible to regulatory competition. And a third area within supervisory convergence relates to specific topics within the CMU, like passporting in asset management, like the upcoming prospectus regime, as areas that are important. So we are clearly changing our activities in the direction of more supervisory convergence, and these are some of, and I can, elaborate on them further if there's any questions on those areas. Certainly happily to respond to them. But you can see that we are now moving into the space of supervisory convergence. For example, in the new environment and also under MiFID, we have to issue many opinions. So if a if a member state gives a certain exemption, for example, regarding pre-trade transparency, or when they set a position limit, they need first to have an opinion, from ESMA. And an opinion seems, well, what is an opinion? Well, we know from the past, for example, our pre-trade transparency waivers, is that opinions are lived up to and are respected by the national regulators. And that all fits into the story of supervisory convergence.
So let me ask you about MiFID, because that's obviously, I'm sure, on many people's mind. The first thing is we keep hearing, rumors that the delay deadline may be further delayed. So can you put our mind to rest that we're not going to write about MiFID until?
Yes, I would like to. Well, of course, in the end, that depends on you're the control of your you control your minds and your thoughts. But yes, we are determined to maintain the 1st of January 2018 deadline. When we had those discussions with the Commission a couple of months ago, or I think it's more, we go back to the autumn of last year, we all agreed that it is important that you only delay once, and so you need to take a new date and stick to it. And as you know, we have delivered all the technical standards. We have delivered in total 48 standards, and as you know, the final discussions were only on 3 technical standards, the famous position limits, ancillary services, and bond market transparency. But all other ones are accepted, in principle accepted by the Commission. That is the indications that he has given, and that is also the same indications we have received from Parliament and Council. And so I would expect that in terms of going forward with delivering the technical standards, that is on track. And we are also on track in terms of doing the IT side. So as you know, there is a big data component to MiFID. This all relates also to stability concerns. We need to have more data on financial markets, and also better data to look into, for example, market abuse type of issues. And we are play an important role as ESMA in building those databases and gathering these data, and that is also on track. So 1st of January 2018 is on track.
It's on track. And you don't think that the new guy and new commissioner arriving would want to take another look at those technical standards? You think that's on track to be approved?
Well, that is on, you should realize it, the technical standards are not agreed by an individual commissioner. They are agreed by the College of Commissioner. It is, again, this is an institutional decision. It is not the decision of an individual. And so we are on track and work on the basis that of the 1st of January 2018, or so I think formally it's the 30th, if I'm correct.
Yeah, that's
I think there's 2 or 3 days later.
And let's talk for a second. There's been a lot of activity in the asset management space, including the FSB came out with some principles, I guess, a couple of weeks ago now. Where do you stand on all of that, and how do you see all these regulatory movements coming together? Because there's a lot going on, often in contradiction.
Well, I think there's the discussions by and the recent publication by the FSB on risk and asset management go back to a whole development which really relates to the financial crisis, in the sense that typically securities regulators were not concerned about stability issues, and securities regulators always had a very strong focus on investor protection, on orderly markets, but were much less concerned about stability issues. And of course, on the basis of the financial crisis, we have learned that there can be issues in securities markets which have an important implication for stability. If you're looking to derivatives or securitizations, we now understand that it was a weakness and it was a problem that we didn't focus sufficiently on stability issues in securities markets. So there's been the implication that we look at stability issues. That is also part of our formal founding regulation. So looking into stability and the stability objective is part of our founding regulation. And in addition to that, it also has resulted in a lot of data collection obligations. The idea is that we need to understand what is happening in securities markets. I think it's fair to say that when we were having risk discussions internationally until 7 or 8 years ago, we typically had, the the risk analysis of the banks, of the commercial banks, instead of our own risk analysis of the securities markets. And so what has been happening in the past years in response to the financial crisis is much more focused on stability, but also much more focused on data collection. If you go into pieces of legislation like the credit rating agencies, what we have for hedge funds under the AFMD, what is EMIR for derivatives, they all have a very strong stability perspective. And also our data collection, building databases, it has become much more important. Then focusing specifically on asset management. In asset management, what we have seen obviously is that it's been growing very fast in the past 7 or 8 years, depending a bit on what kind of measures you take. It is about doubled in size since 2008, 2009. Obviously, part of that is simply value. The other part is indeed inflows. And there is a concern about, with the increasing size of the asset management sector, are risks building up in the sector, and especially in the context also of the possibility of a risk reversal, a rate reversal, where interest rates would start to increase again. So that has really increased attention to this area, and as securities regulators, we need to look into stability issues in asset management. Initially, the FSB was looking for this horrible long term. What is it? Basically the too big to fails in asset management. The identifying the large asset managers that would be systematically relevant. Yeah. It's been very good that they moved away from that story, and so now it's very much focused on issues like leverage. Yeah. Liquidity, to what extent is there a risk because of the redemption risks in asset management, and also securities lending issues. So they have now said, we need to look into those issues, which I think we support very much to look into these issues, because indeed we need to also have that stability perspective of the securities markets.
So, aren't there too many cooks then? Because if you guys are looking at stability and they're looking at stability, is there a danger of either doubling up or things falling between the cracks in regulating asset managers?
Well, I think you're right that there is some. There is an element of the stability authorities now looking to all parts of the financial system, and when they see certain risks in the financial system, they will give recommendations. And we have seen some friction on that in the US, and some of that friction was there also publicly between the authorities there. But I think it's inevitable that also I find it very good that we as securities regulators now intensively work together with the Stability Authority in the EU, which is the European Systemic Risk Board. They are looking into our, I would say our area, but they of course say it's also their area because there can be stability issues. Obviously, there is. We need to understand the stability risk that might be playing there. We try to explain as good as possible, what kind of regulations we have, how it works from a micro perspective. But that dialogue is very important. That conversation is very important, and I truly think that we are progressing there. We are really progressing. For example, one other area is until we currently don't have sufficient insight on securities lending in the asset management sector. You can expect that securities lending increases the interconnectedness in the asset management sector, but also between the asset management sector and, let's say, the traditional financial system with banks. How do these interconnections work? And when there is a demand for redemptions, does the system still work properly? And doesn't securities lending prohibit the quick reactions from the asset management companies to deliver on redemption requests? So I think it's important to progress also in this area.
And you think of yourself as a frontline regulator for those type of operations and practices, or do you think the prudential regulators should be the ones that kind of step in if there is a problem?
I think it's, as I just said, it's it's the combination of bringing together the knowledge and the experience that we have as securities regulators already for many years. Redemption issues have been key elements or key issues always in the asset management industry, but really from an individual investor protection perspective. The question now added to this is what can be stability implications added to that. And so ESMA really wants to be in the forefront of this debate. I think there are some securities regulators in the world that are a bit concerned about this extra attention for their area. But I think...
one of them, or?
No, I think we should be, I think the word probably is humble, I think would be the word, is in the sense, it is a difficult job to understand where risks are. And the reality is that if we go back to the last financial crisis, there were many that didn't see it coming. And so we need to understand and learn from other regulators and other experiences to have the best possible view on risk. And you can see it at the type of analyses that we are now doing. I haven't seen these when I was a national securities regulator and really focusing on investor protection.
Great. We're at about the halfway point. So at this point, I want to see if there are any questions from the audience. I've got a lot more, of course, but I just want to see if there's any question in the audience. As I said, please state your company, your name. Yes. Yes, it's coming. It's coming. Sorry. It's coming.
Angus Camvin from the Investment Association, representing the asset management industry in the country. Stephen, you mentioned as part of your future work looking at the functioning of the passporting arrangements already in place, presumably under UCITS and FMD and perhaps even MiFID, in relation to asset management business. I wonder if you could just elaborate on that.
Well, what we an important. So I think it goes back to. And this is also behind the Capital Markets Union, where we want to further improve the functioning of the asset management sector and really make it into a European sector. And I think we can further improve the performance of the asset management sector, especially. This also goes back to the ideas that the Capital Markets Union, at the end of the day, is not only about, let's say, how can companies or new ventures get their capital, but it's also about how can we increase the participation by consumers, by retail households into the Capital Markets Union. It is important to have both legs of the story, or how do you say it, both parts of the story. You can only have a Capital Markets Union if there's also good participation. Of course, this is partly institutional, but it's also partly at the end of the day, this is about retail investors that need to participate more actively in the Capital Markets Union. And a very logical vehicle would be the asset management sector. There are different measures there. There are measures, let's say, on the front office in terms of the interactions with the consumers. We can discuss that maybe later on if there is interest. I think also on the back office side, which relates indeed to the passporting, to what extent, how can you move around as an asset manager across the EU, that can be improved. Some of that relates to the costs that are charged for passporting. Some of that relates to the responsibilities of the homes and the hosts, and to what extent, who is responsible for supervising marketing activities of asset managers. The Commission currently has a consultation running on this topic, which I think is very good and very important. Where we have already progressed is, for example, with reducing the fees for UVICA and USEF funds, where the legal text, and sorry, going to the nitty-gritty, but the legal text is very clear that you cannot charge any fees. And we still observe that some national regulators were doing that and were in the process of ending that practice. And there's been good responses on that point from the national regulators. And so, this seems like really operational stuff, but at the end of the day, this is really what helps and what makes the market function better. We have done it in UVICA and USEF because there the legal text is crystal clear that you cannot charge any fees. In other pieces in other directives, it's less clear. And so then you need to see what is possible. But again, I think we need to let the passport, we have progressed enormously on passporting. We know that there is already been a lot of movements on funds across the EU, but the better and the smoother the system can work, we should try to achieve that.
There's a question right there, and then we come to you, sir.
Good morning. This is Julian from AFME. Good morning, Stephen. We understand that the FCA and other national competent authorities across the EU 28 have always given ESMA a lot of support in terms of technical expertise and resourcing. How does the EU referendum result change that relationship with the FCA now?
I think I need to pour some water again in the glass. So,
Terrible, isn't it?
That's,
Terrible.
no, I just said, there might be other people wanting to have a similar question. I think I've made my position and my view is clear on this one. How the decision of last Friday will affect the financial markets is in the hands of the UK government and the EU institutions. And just to emphasize, indeed, the FCA is a very important contributor to the work of ESMA, just like other regulators have been very supportive. We continue on that basis.
So let's not ask the same version of that question again, because obviously there's only so much he can say. So, but hopefully this is a different question. Go ahead.
Hugh Jones, Reuters. We had President François Hollande last night and many others in the last few days saying that euro-denominated clearing is going to shift to the Eurozone, to its natural home, as many people see it. From a regulatory point of view, what's the challenges of a rapid and large-scale shift in euro-denominated clearing from London to the Eurozone? Is that of concern? I mean, any risks coming out from that? Would they need reauthorization for CCPs to handle such volumes?
I'm afraid, that this question is in the same category as the previous one, and so I cannot fill up my glass any further. So
is it half full or half empty? Is it half full or half empty?
It's half full.
Oh, half full.
No, as I said, EU laws continue to apply, and let's not speculate on how that might change in the future.
Okay. I know my colleague Sylvia Shirley-Burley wants to ask a question. She's here on the front row. Wait for the mic. Wait for the mic. Not on that. No. There she is.
On the MAR coming into force on July 3rd, there has been some discussion about the final rules not being very clear. What is your, what are you going to suggest be the supervisory approach to this new regulation? And can you expand a bit more on?
Well, we have. I think this is at this stage mainly also in the hands of the European Commission. We have delivered our technical standards for MAR in after summer last year. I understand the fact that not all technical standards are clear at this moment is making it is a complex issue and makes it more difficult to prepare. But it's if there's any questions on the status of the technical standards, I think that would be for the Commission to respond to.
Gentleman in the second row here.
Hi, I'm Andrei Novakov, member of European Parliament. I was wondering, how do you having in mind that 44% of British export ends in EU, do you believe the markets could be reoriented somewhere else to stock the goods, so there won't be deep and continuous crisis in the markets in that direction? Thank you.
Is that same category or?
I think it's same category. So,
So, and I'm going to come to you, sir, in a second. Let me ask you a couple of other questions since we're on an interesting topic. So, one is on high-frequency trading. So, your office, your services came out with a fairly benign view of high-frequency trading. You say it didn't cause a risk to the markets. What's your sense on that? And it's something that in the US has been seen as potentially risky. So I'm curious to hear your perspective on that.
Well, first of all, I think we have at ESMA, together with the national regulators, we already have at a very early stage looked at the risks of algorithmic trading, of high-frequency trading already in by the end of 2011, we issued specific guidelines related to specifically targeting algorithmic trading with requirements around controls, testing, having the right expertise, having the right staff in place, both at trading venues, investment firms, to control the risk of high-frequency trading. What we have done additionally, we have continued work, so we have those guidelines, we issued them in 2011, and they've also now become part of the MiFID/MiFIR package. So I think that is an area where we are quite in front of the game and ahead of the game if you also compare it with some other regulators, with some other regions across the world. What we have subsequently done, we have continued looking into the issue of how is liquidity affected by high-frequency trading, and we first did a study on how big is the role of high-frequency trading in markets, and then we looked very recently on the so-called issue of duplication of orders. And duplication of orders is the observation is that if a trader wants to trade a certain, wants to engage in a certain trade, is that he doesn't only place that trade with one trading venue, but he does it also with other trading venues. And that is called duplication of orders. And what we saw from this study, for example, is that in principle there's 20% of orders are so-called duplicated orders. And what we also see is that once the trade is accomplished at one trading venue, is that these are, a substantial part of those are cancelled at other trading venues. The question is how you look at this. To some extent you could argue this is giving an inflated picture of liquidity because there is more trades are in the book than in reality are available, because once there is part of the trade is executed, the other part will, which is placed at another trading venue, that will be seized or they will be withdrawn. On the other hand, it is a way to ensure, first of all, is that there is arbitrage across trading venues, and that there is that liquidity is spread across trading venues. If you would have the obligation to only go to one place, then automatically there will be a clustering in one trading venue. So that is the reason for saying, having this quite neutral view on this. I should also say this is not only a strategy conducted by high HFT firms. We also saw they were more into this than other firms, but it was not exclusively a trading approach from the high-frequency trading. So high-frequency trading. Of course, the lesson is we need to take that into account when measuring liquidity, because in reality, the liquidity as such, when you measure it, in reality is lower, but the practice itself increases liquidity because it goes over, it goes across multiple trading venues, and also it helps competition across trading venues, and that was the reason for the quite neutral view that we exposed in the report.
And you're confident that that would happen even in market conditions that are less benign than when you tested it? Like, for example, when markets are going down. That seemed to have been the problem in the United States. And the markets are really stressed. The frequency already hit the bids, but then they withdraw, and that exacerbates the market movement on the downside.
Yeah, well, the fact that liquidity gets more problematic under difficult market circumstances is not exclusively for high-frequency trader. We know that typically under stress, trading gets more thin. People are start to be risk averse, and so I don't think that is an exclusive issue for high-frequency trading.
Fair enough. Let's have some more questions. I have a couple more big topics to tackle. I think there was a gentleman right at the, well, no, sorry. First, that gentleman over there who's patiently been waiting for the mic.
Thank you. That's very kind. Jerome Lusson from Lavin Partners. I want to ask about the, the purpose of ESMA, and one of the big issues has been your lack of resources. There's also been talks about lack of budget and people not wishing to contribute more towards that. And in view of the potential, changes in the world, you're talking about watching the markets, financial crisis happening. How do you resource all of your work and also monitoring and protecting, customers if something does happen?
A couple of issues on the resourcing. So, first of all, the resourcing was especially very problematic in the first years. where we as I've said before, we opened shop and we still had to build a shop. So we had to do both things at the same time. Also, I think it's important to realize that a lot of the work that we're doing is also supported with the national regulators, and they do also contribute to our work. But at the same time, we currently are 200 people, and that is still very tight, and we have argued consistently for a better budget. I would also make the point that this is not only an issue for the ESMA, it is also clearly a point for the national regulators. What we have seen with the idea that ESMA is kind of a substitution for national regulators is not the right view of how we have changed the supervisory structure in the past years. What has been happening is a strengthening and an increase of requirements, both at the national level and both at the EU level. So it's not that what has been happening in the past years is less responsibilities for national regulators and more responsibilities for ESMA and EU supervision, but we have increased, because of the financial crisis, we have strengthened both national regulation and supervision and EU. And I think if we really want to be serious about the Capital Markets Union, we also need to support our supervisory bodies with sufficient resource. And so it's not only an issue at European level, it is also an issue at national level.
Ideally, how many more people would you need to cope with all this stuff that you have to do?
Well, what we have said, we always, so what you can see is the budgets that we deliver is the best indicators, and without exception in the past years, our budgets that we proposed have not been met. So I think that is the clearest numerical example. You can go back to our budgets that we delivered, and that is the best indicator. But you should realize these budgets were agreed together with the national competent authorities that are obviously also concerned, because a part of our budget is paid by them, which I think is an unfair system, because it means is that more resource for ESMA is less resource for them, which doesn't fit the story about increasing obligations both at a national level and an EU level. I think part of a successful capital markets, we also need to realize a bigger capital market, a more interconnected capital market means more risks, and so also you need to have more. I think if you say it more popular, you need to have more cops on the street. If there's if it becomes a bigger activity, there needs to be more supervision to make sure that it works well.
I have a question over there, and then one in the far left.
Thank you very much. Good morning, Nicolas Samaran from Invesco PowerShares. What's ESMA's view on the growth of the ETF market, which is at the crossroad of capital markets and asset management?
Well, let's a couple of points. So we know it's been growing in the EU, the ETF market. At the same time, the growth has not been strong as, for example, in other parts of the world, and especially in North America. Where, and of course, you can have different types of ETFs, but there is also discussion, of course, on to what extent should be funds that track the index, which are not necessarily, there's a big overlap between the two, but not necessarily identical. What we have said on this area, of course, we have had the famous discussion on the closet indexing, and the idea is that if you are tracking the index, is that you should also charge on the basis of tracking the index and not on the basis that you are active. I think there is a big demand for many participants in the markets for cheap index tracking products, especially in a low interest rate environment where it's very difficult to make a good return. Costs of asset management products starts to be extremely important, and so I think there's a big demand for low-cost asset management products. We know that the costs of asset management products in Europe, on average, are higher than, for example, in the EU and then in the US. Of course, some of that relates to scale. You can imagine that the bigger your market is, you have the better benefits of scale economies. But costs are very important. We need to bring down costs in the asset management industry. We need to be very transparent about costs. That will also come with the PRIPS requirements, and with the MiFID requirements there will be more information on the cost. But in general, that direction of lower cost products being available to both the retail customer and also to the professional industry, I think is very important. It is of course a bit concerning that if you're looking at the EU market, it is mainly the professional market that has, where the low-cost products have made a bigger inroad than in the consumer side, which is of course, raised some concern. I fully understand that distribution networks can be more expensive in the case of retail consumers, but in my view, it doesn't explain the big difference in usage of index tracking funds by. That there's, the take-up is not sufficiently possible at this stage for the retail consumer.
Mm-hmm. There's a question, I think it's the third row, gentleman with the glasses, right there.
Thank you. I just had a question about...
Your name and affiliation, please.
So I'm Tom White from Global Counsel, an advisory firm in London. I just had a question about ESMA's cooperation and joint supervisory agreements with third country regulators, because you have a fairly extensive number of those agreed for the AIFMD directive in particular. And I wondered if you could tell us how those are working in practice and how you see them evolving, particularly during times of stress in the markets.
So the MOUs that we have multiple MOUs. Typically, if there is a supervisory area or regulatory area, there's an MOU. I didn't go along it, checking it, but I think nearly in all areas where there's rules and regulations, there is also cooperation with MOUs. ESMA as an authority has MOUs in the area of credit rating agencies because there we are the direct supervisor. We also have MOUs relating to the recognition of third country CCPs. And in the area of the AFMD, we negotiated them on behalf of the member states, but the final signature was between the individual member states in the EU with the individual countries outside the EU. I think it's been, at a certain point in time, we had these collective signing sessions where I think more than 1,000 MOUs were finally signed, because you had the combination of 28 member states doing signing with multiple third countries. These are very important for our work. They use these for specific cases where they need to have more information. For example, where and going a bit closer to home, and because this is the area where we are as ESMA mostly involved, both in the area of credit rating agencies and also in the area of CCPs, third country CCPs, we have a lot of information exchange with foreign regulators. In the area of CCPs, we have extensive discussions with foreign regulators when we recognize a third country CCPs, and so overall we are satisfied with the progress and the way these MOUs work. We know that IOSCO is working on a next phase of these type of MOUs to also, as you know, there are new issues relating to mass data exchange with the availability of bigger databases but also, of course, how it works together with privacy laws. That are important issues for us to work. But in general, we work good on the basis of the existing MOUs.
There's a question right at the back, like in the middle, and then we'll come to you, sir. But first over there.
James Hughes from Cicero Group. I had a question about the technical standards on bond market transparency, where the Commission and ESMA seem to be in disagreement on the final rules. The Commission signalled to Parliament last week that they want to stay with their original proposal, which is for ESMA to write a report before you move to the next phase of the transparency regime. Is that feasible for ESMA, and is it desirable? And if I may, a slightly broader question, actually, it's a separate question. Do you detect any support in the European institutions for ESMA to be more involved in the level 1 process, so that you understand the intentions of co-legislators on the sort of political intentions before you were then asked to write the technical standards?
Yes, so on the bond market transparency issue, we were very much in favor and fully in line with also the wishes of Parliament and Council is to bring more transparency to the bond market. And the idea is that if you do it in a calibrated and in a careful way, is that it will help the functioning of the bond market. Obviously, it is not our role as, you know, when we bring more transparency to the bond market, it should do it with the perspective is that it will help trading, because one of the typical situations where people don't where people don't want to trade is where they are uncertain about valuations, where they don't have sufficient information about assessing the value. So that we fully supported the idea of more bond market transparency, at the same time fully recognizing that the bond market is very different from equity market, and so you need to be much more careful, and also of course that if you have large trades that you should be exempted. And on that basis, we have done this exercise and came up with our technical standard. We think it is a very carefully calibrated technical standard, where at the end of the day, it's only 5% of the bond market that would be coming subject to the transparency requirements. And even those 5% would again have the exemptions for the larger trades. Then, so it was already a very carefully calibrated system. And then in addition to that, the Commission proposed to go for a phase-in, where we go to that, let's say, 5% staggered in a 4-year period, which we also support. I think where we have different point of views is on whether it would be within the powers of ESMA to take these decisions to go forward and already have that included in the technical standard now, and that we would do the liquidity assessment. Is there any reason not to go for the next stage? And we think it's a technical assessment, and therefore it should already be included in the technical standard itself, is that you move along these stages, and if you want to stop progressing, you then, ESMA would have to go back to the Commission, Parliament and Council to stop that process. We think that is the better process. Why? Because it is faithful to the objective of bringing more bond market transparency, but also we think it is less cumbersome for all involved, because we know that a change in the technical standard is complicated. There's the requirements about doing consultations, doing impact analysis, and also, to be fair, we have seen in the past years that there can be delays with these technical standards. So that was the reason why we opted and are convinced that the better model is the model where the phasing in is already part of the technical standard, and that the technical assessment of whether liquidity can cope with going for further transparency should be in the hands of ESMA. But of course, this whole staging would be completely up for scrutiny at the beginning, both to the Commission, Parliament, and Council. I think on the point of the bigger involvement of the ESAs, the authorities in the level 1 debates, clearly, and I think we all agree on this is not to give us a formal role in the negotiations. You know, we're not a political body, and so we should not be part of those negotiations. But we can see that some of the debates could benefit on both sides from understanding the intentions behind the level 1. And so I would hope that we can progress on that topic. You know, some members have sympathy for that point in the Parliament, but I think there are also some concerns about how will it affect the, let's say, the political balance when negotiating level 1 text.
We have 2.5 minutes left, so please, the gentleman over there.
Good morning. My name is Werner Kranenberg. I'm an attorney in the areas of shareholder rights and corporate governance. I have a personal question for Dr. Maijoor. You took up office in 2011. You're the first chair of ESMA, and you just started your second term. So my question is, are you happy in your job? And following on from that, in 5 years' time, what will be the greatest achievements that you'd like to look back on in over 10 years?
Yes, I enjoy immensely my job. It is, he asks us, he gets an answer. So, no, I think it is. It is. I think it's been really great to build the authority. to establish the authority and to see that it's working. There's various areas, a lot of areas where we have really made a good contribution to financial market functioning. And so I think that is very, very satisfactory. And of course, in that way, contributing to the public interest is always been a driver in my career. And I really enjoy that, and also together with both the staff at ESMA and also the board of ESMA, it's really been very good to work together. As I said, in terms of achievement, as I said, what has been in the first year our big achievement is establishing the single rule book. I'm very proud what we established there. If you're, for example, looking what we have achieved in the area of derivatives, I'm really proud of what we achieved there. I think it's really good for financial markets that we move to central clearing, that we have very identical requirements across the EU, and I truly believe it has improved financial market functioning. Also, the end investor, the end participants have more transparency, more standardization of contracts. So these are clearly benefits there. What will be key in the coming years, as I said earlier, is supervisory convergence. And to some extent, it will be maybe the less visible part, but it's the more difficult part. And to some extent, agreeing on a rule is relatively straightforward compared to getting consistent supervision across 28 member states. And so a visible impact on more consistent supervision, I think that will really be important in terms of an achievement in the coming years.
So on that note, that's a perfect note to end. I'm sorry for the people who couldn't ask the question, but my pay gets reduced if we go over, so you wouldn't want that. So first of all, I'd like to thank Nasdaq for partnering with us on this event, the Chicago booth, of course, for offering this wonderful room. The audience, very important. Thank you so much for the questions. Thank you in general for all you contribute to Morning Exchange. It's so important that we keep in touch. I keep saying every morning, but it's so important we keep in touch. It's so important that the feedback comes into what we do at Politico in general, in particular in financial services. So please stay in touch. Remember to fill your evaluation form to say just how brilliant Steven was. And of course, you can stay for breakfast just down there. But don't leave, because we have to thank Steven. Steven was incredibly brave to come, was incredibly helpful. I am from Southern Europe, so I have no problem giving positive feedback and hugs. So I think you were brilliant, and thank you so much.